So anybody got anything they want to kick it off with? Questions, problems?
I don't have a problem, but I do have a question regarding one of your posts in the Discord where you said don't trade options with those, like, for little pennies, go for dollars. So I was wondering what you meant by that.
Well, I saw a post up there by Misfit, I think it was, and he was showing his option trade, and he traded it for 9 cents. And it's just not worth the risk to put on a position for 9 cents.
Right. Oh, okay.
I mean, it's not $9, but I wouldn't risk capital for $9.
Right. Also, how with a smaller account can we play the Netflix, and those big, it's not like SPY and Netflix, how to play that? Do we need put a spread on there so that, we don't need that, so that the brokers would not reject it? Like I had Schwab, and they, I was trying to put a trade, but Amazon is too rich for me, I know.
Yeah, well, is your account set up for spreads?
Yes, it is. They finally approved it.
Okay.
So,
well, you just have to make sure that the difference in strikes is going to be your margin requirement. So if you got a $1,000 strike and a $900 strike, that's going to be what, a $10 requirement. So you have to have $1,000 of margin for that. Or no, I would have to look. So that a dollar spread would be I guess $100 margin requirement.
right.
Yeah. So you just have to keep your spreads within whatever your portfolio will allow.
Oh. Right. I think I can do the SPY easily, maybe Netflix, but with SPY being so liquid, then, but I have to go way out of the money so that, I just make decent amount of premium, but not kind of too little for it to be, not worth it.
That's the problem with the ETFs, like the SPY. I mean, it's already an average of all the stocks in that fund. Or actually, the SPY is like an average of the S&P 500. So it's all already average. So yeah, the premium is going to be very, very small. So doing a spread on that is going to be very difficult.
Oh, okay.
That's why I posted examples like Netflix, a single stock, and Netflix has a little volatility, so you can get a little bit of premium on those spreads.
Okay. Yeah, I'll try that so that I can, but I don't want to get into my margin that I have there available, because that scares me. So then they start, I should have asked them, but I'm sure you know it. Once you get into the margin, then the daily you are paying interest on it, right? Depending on what the brokerage requirement is. Is it a daily interest that they charge?
You're not going to pay interest unless you take possession of stock. Everyone's always worried about interest. With what we're doing, you're never going to pay interest.
Oh, you mean with options you don't pay interest unless you buy a stock, right?
Unless you take possession of the stock, and that's only if the dollar amount of the stock is over your cash value of your account.
Right. Okay. Gotcha. Now that makes sense. So in options, there will be no charge, because so even if I get into my margin, would the margin kick in if No?
No.
Okay.
Like I say, the only reason you need margin is to be able to take possession of the stock if you get it assigned. But with spreads, you don't have to worry about that. I do cash secured puts, so there is the possibility that I could get assigned, and so I have to either have the cash or the margin to buy that stock.
Okay. Got it. So how was your trade? You posted a couple of I think trades in there, and you did say that how's your experience with Tastyworks going?
Yeah, I'm not crazy about Tastyworks. It's I like Internet Broker better.
Okay.
The actual trade is a Netflix spread, and it's going against me. I actually turned it into a condor. So this morning I sold the top half of the condor, took profit on that, and then later in the afternoon, as Netflix approached, and even went down below 470, I think it was, I had rolled it out for 2 weeks and resold the whole condor out for about 2 weeks and turned a profit on it again, so I'm just going to wait on it.
Oh. I think that's pretty much it. I also sold AMD today for the price strike was $53 and the premium was 88 cents. So I think that was pretty good. And it's like 15 days out from today.
Okay. Okay, who's next? Hello, Nathan. Hello, CPT.
Hi, this is Raymond.
Okay.
I'm new to the group. I'm the first time to join, so
Yeah.
interested to see what you guys are talking about.
Well, a little bit of everything. It's I kind of just open it up and ask people what they need help with or whatever.
Well, before anyone else joined the room, I had told you that I actually did have pulled I think I told you all last week that I was generally just doing my short puts for 50% and getting out, but 2 of them I did not hold to the 80% mark, but AMD I actually did hold to the 80% mark. And if I held Twitter another day today, it actually would have hit the 80% mark. So, but I did do my first 80%, hold it. So, that felt good.
Is one of you Danchi? DNCH? I'm looking on the Discord, and I think someone's having problems getting in, so that's why I'm asking. Nobody? Oh, here we go. Here's another. Wow, we're actually starting to get a group now. Okay, so who else has got something? Well, there's Dan. There he is. Hello, Dan. Everybody's quiet. Can anybody hear me?
Yeah, I can,
Okay, I just want to make sure stuff's working.
you're good.
So let me ask Ms. Catman, with the Twitter, how far out did you go, and what was your strike price and stuff like that? If you can please explain.
Yeah, let me pull up my chart.
Okay.
I sold 33.5 on the 20th. On Monday.
Okay, and your strike price was what? Sorry, what was?
Expiration was July 31st, so.
Okay, July. Okay, so you. And your strike price, what did you say was? I'm looking at my.
It was 33.5.
30, okay. So. Okay. So you said you bought it back because it's got 9 cents left, and then between 9 and 14.
Well, I actually bought it back yesterday. I should have waited a day, but there was this. It didn't reach the previous days. It didn't even reach the previous day's midpoint, much less the high. And there, I don't know what I was looking at, but it was just like there was some weakness that was going on, and I knew that I was in class today, so I wasn't gonna be able to watch it. But I saw it today, and I was like, well, if I'd stayed in it one more day,
Yeah, that's always the case.
yeah.
It happens to me too.
Yep. So I'm up. All three closed for a profit. It just wasn't as profitable if I'd let it run. And then the Cisco one, I actually went for an August 21st, and I think I just kicked myself in the butt going, why did I do the August 21st and not the July 31st? So that was on me. But like I said, I closed all three profitable, but AMD actually was like, I just put that 80% closing price order for 22 cents to close it out. Like, one with life.
I see. So Cisco is like the SY, the food, or the
No, the tech.
okay. Gotcha. Thank you.
You're welcome.
See, that's what happens. We keep learning from each other. Randy is the one to pull us together, and then we get so much insight and share all this.
Right.
So,
No,
so good.
appreciate what Randy's doing and everyone sharing, because we do learn from each other.
Right, absolutely, absolutely.
For me personally, this is the first time for me to join the Zoom, so I did not know how you guys, is it everybody discusses their strategy, or whoever has question? What's the main thing?
Yeah, just a lot of people here are fairly new to options, so just whatever questions you have, or if you have a trade that you're concerned about. I mean, I do this on Thursday so people can make a decision for Friday. But yeah, it's just kind of open. I'm hoping that as it grows, we'll get to know each other, and it'll just be like everybody just gets around like a coffee table or something and just chats.
So for my strategy, I do weekly. I usually start on Friday my trades, and I have a short list of stocks that I like. IMD is one of them. Started with American Airlines, and honestly, almost stuck with it. I wanted just to get done with it. I let it either expire. Sometimes I roll for the next week, or let it get assigned and then sell covered call.
Mm-hmm.
I I usually have 4 or 5 underlyings at the time in a week. I have one pharmaceutical, one airline, one tech, one energy. So I kind of diversify my selection. That's how I've been doing it for kind of new. It's been about 4-5 months where I'm almost everything is either selling puts or selling covered call on something assigned.
Mm-hmm.
And I like it so far.
Well, I've been doing this about a year, maybe 13, 14 months. And yeah, I like it. I do basically the same thing you do. I'm starting to move towards monthlies, and I've got like 3 stocks that I now do like 10 options on it a month, and I just roll them out every month. You know, it's T, ExxonMobil, and Citibank, and they're just real predictable.
Yeah. You do covered calls on those?
No, I just do cash secured puts. If I get close to doing it, if I get close to getting a sign, I'll just roll it out to the next month.
What makes you switch towards monthlies versus weeklies?
Say that again?
What makes you go for monthlies instead of weeklies?
The monthly gives you more premium to start with, and it gives you time to work it. So if you get a big down day in the stock or an up day in the stock, you can cover it and then start over again. So if you get a chance to get down, better than 50% of your premium, just take it and then go again. I think the statistics have proven that doing that increases your chance of profitability in the long run.
Sorry, go ahead.
So you're not often letting them expire, you're kind of just taking it once you get to 50 or more?
I generally never let anything expire. I just, either it's going against me and I roll it out, or it's going for me and I'll take the profit and run. Occasionally I'll let them expire, especially if it's, usually I let it expire when I just forget about it, because I have about 3 accounts I'm monitoring, and one of them has like 30 positions in it, so sometimes they get so close and they get so cheap, I just let them expire. But the ones where I'm treating them kind of like real estate, the ones I have 10 contracts on, those I monitor and close them out. Between 50 and 25% left.
You close between 50 and 25%?
Yeah, it's somewhere in there. It just depends. If the market has a real jump, it could go from having 60% still left in the option to having 30% in one day. So yeah, it's just kind of somewhere in that range.
Yeah, my Altria covered call kept tipping into the money, and it got up to 56% of profit Monday, so I took it there.
Yeah, nothing wrong with that.
And then I've got an AT&T that's going to expire next Friday, and I'm sitting at 88%. So I'm thinking, should I really wait another week to get $4 more out of it?
No. So you put your money back to work. So cover that position and go with a new one.
1 week you can make more money.
Yeah. Yeah, that makes sense. Cool.
Yeah, I can barely hear you, Alfonso, if you could maybe talking to Mike a little closer. or not.
So I have a question for CPT. What kind of energy stock do you have in there that you play option on?
So I have BP, but yes, I used to do dividend capture and covered calls before, but then during the drop in the energy, it's still below my cost. So what I'm doing now is selling puts against it until I kind of lower my cost to possibly sell it if it doesn't recover. So I had puts sold against it. I used to do weekly calls against them, but then when the downtrend, when the market dropped, it went way past my strike. So I had to roll it out months to have a credit in the rolling. So I'm kind of stuck with it for another probably 3-4 months. But so far it's kind of creeping up slightly, so I like it so far, and it's helping me with doing with selling puts against it, not against it, but cash secure puts to make some money while it's climbing up.
Okay, thanks.
Absolutely. One thing I've been doing with American Airlines is selling, which is a strangle. When I got assigned, so I sold the call against my shares, and at the same time selling puts. That increases my profit, and it's a stock that, although it's risky now, everybody's talking about bankruptcy, but American Airlines, but I don't mind owning, and I think it's going to recover soon. So this is one strategy. I used to be scared of doing it when they talk about strangles, but after I found myself doing it, after I got assigned some shares, that gives you more profit from the stock, as long as you know that where to sell the put and the call to be in that channel to avoid accumulating a lot of shares in your account, because that will tie up a lot of capital.
Yeah, that was my next question to you, which airline you're using. So you answered it.
Honestly, I don't like airlines. I used to do some selling puts on Southwest because they're safer, in my opinion, than American Airlines. But I got convinced. I had patients and friends that they work with American Airlines, and everybody was talking me into it. So I ended up jumping on American Airlines, and I think, and I hope at the same time, that they will increase the price, or the stock price will increase.
Okay.
So you mentioned a strangle. I'm pretty new to this. Is that essentially an iron condor but without spreads?
So the iron condor is 4 legs, strangle is 2 legs. You sell a call and you sell a put with different strike price. The put is lower strike price. So for American Airlines, I sell 11 or 10.5 puts, and I sell a 13 call.
Expecting to stay in that range. That's the idea.
I want it to be over 13. I want to get a sign on the covered call, honestly. But yeah, if you don't have the stock, if you're naked on both sides, then you want it to be between in that range, between 10.5 and 13. But in my case, my call is covered with the stock, so I want it to be over 13.
Gotcha. Just want to make sure I understood what that was. So
You're welcome.
I don't know if you can hear me, but Randy, when do you roll an option? For example, I have a snap because I bought it yesterday, and I have it to 28 August with a 21.5 put, and the stock is trading at 22. When do you roll an option?
Yeah, I'm not sure I got all those numbers. You're breaking up a little for me.
Okay, I have the snap put 21.5, expiring 28 August. I'm losing like 40%.
So, yeah, I would just, you know, what stock is it?
Snapchat.
Can you say it again?
Snapchat.
Can someone else say that? Because I don't.
Snapchat.
Snapchat. What's the ticker on that?
Snap.
Snap?
That's, yeah.
Oh, after hours, that's good.
Yeah, but yesterday and today it's like 12%.
Yeah.
Okay, and you got what put?
21.5, expiring in like 1 month.
21 and a half in a month.
When did you open it?
Yes, 2 days ago. Before earnings, yeah.
Yeah, I would maybe give it half the time, maybe 15 days and see where it's at. It may recover. It's right now, it looks like it's on, it's bouncing right at the, what is that? It's right on the 50-day moving average, so maybe it'll bounce back up. So if you got 30 days left, I wouldn't worry about it for another 15
I have
days.
35 days left, so yeah.
Yeah, just give it some time. Today was a really bad day on the market in
Yeah.
general, so I wouldn't judge by that. I know it's scary when it goes against you right off the bat, but sometimes that happens. Was there earnings or something today?
Intel, I almost bought it today before earnings and it dropped it. It's like 12% down today.
Snap had earnings 2 days ago.
Yeah.
Yeah, I would say if it drops below 20, you might want to go ahead and roll it out. But right now it's right at 22, so that gives you $2 buffer.
My break even is below 21, so yeah.
Yeah.
I usually roll, because I just roll it out. Do you usually keep same strikes, or do you usually roll up or roll? Okay, I guess this was a put, so I just roll it down.
I'm supposed to understand you. Sorry.
I was gonna say, I can't understand Dan at all. It's real muffled for me.
So I may have to get a better microphone for the future.
Yeah, that's better right there, what you're doing.
Okay. No, my question was, when you speak about rolling, besides just rolling out, in the case of like a put, do you usually roll down, or I guess that's if you're feeling more bearish on the stock, you would.
Well, yeah, the only reason I'd probably be rolling is because it's going against me. So I would roll down and out, and I would try to, whatever it cost me to buy the option back, I would roll down to whatever that premium would cover so that I kind of break even. When you're rolling out, that's because you're in a bad position and you just want to get out even. That makes sense?
Yep.
Yeah, because, your premium...
It's not against you, so might as well just try to get out even. So you're tying up whatever for your capital, I guess, a little longer, but at least you're not losing money, hopefully.
Yeah, because chances are it's going to go back up on you anyway, and then you can come out okay. Like right now, I'm in an Amazon trade that's going against me, and right now I just want to get out even on it. But
Randy, you said you've been doing this for over a year. Did you, in the last year, what do you think the return could be something reasonable? Is 50%, 40% something reasonable with just puts?
last year I ended up at 47% for the year. I'm currently at 22% this year. And we got half a year to go. And that's with the pandemic thrown in there.
Yeah, that's with the pandemic that dropped down the return, I guess. So without the pandemic, you could have been probably at 50% or 40% by now.
I don't even pretend to guess. But yeah, this is a very profitable way to do things.
Yep.
And that's why I'm kind of trying to share it with people, because, the more people that learn how to do this, the better off we'll all be.
Yep.
So, from what I can tell, doing cash puts, selling them, it's kind of a bullish outlook. Seems like it would perform great and the market's going up. Would your strategy change if the market was started to move a lot more sideways or down again like it did back in February and March?
I didn't catch all that, to be honest.
So, can you hear me a little better now?
Yeah, you just kind of... It sounds like it's
I'll try to
a
speak
can.
slower.
Yeah, I mean,
So since March or so, the market's kind of done better. I'm wondering if it takes a downturn, if cash secured puts would still be your main strategy.
at the heart of a pandemic, I got assigned Apple and what is another one? I don't even remember now, but I got assigned 2 stocks, Visa and Apple. And I just balled up and got quiet for about a month. And I just let the pandemic, the big crash pass. And I waited for the uptick to start. So, yeah, I mean, you just kind of have to pick your spots. I think we're due for another crash. So I'm going to be careful.
Is that basically why you're going to the monthlies? To give yourself that time in case it does go against you?
Well, I do monthly on the more stable stocks, and I do weeklies on my Teslas and Amazons, just because they can move so fast.
Right, okay.
Except the Amazons I got now, I was actually trying monthlies on it because the premium is so huge. But when they start moving $100 a day against you, it gets kind of scary.
Yeah, I can imagine.
Okay, what else, people? What you got?